And what one advice will you give to clients who may be in need for deferring some of their capital tax gains?
So the big thing is timing is of the essence. I recently wrote an article for a publication with 200,000 members with that topic. And a lot of strategies have to be set up before you close. For example, that Complex Spendthrift Trust, you have to pay to set it up in advance of closing so that the trust sells the asset. And some strategies can be done after a close. So the most critical thing is if you're thinking about selling an asset, that's the time to start doing your homework. What is out there? That's the time to start talking to people like me, to say, okay, these are options. I can take their story and their case and say, hey, here's 3 options to look at and help them to start doing their homework. Because then it's very directed instead of trying to look at all 15 or 20 or 30 strategies out there and getting confused.
Right.
So the biggest thing that people need to do is start that discussion before they list a property. If they've already listed a property, it's not too late. If they've already sold a property, it's not necessarily too late. But after you've sold a property, the options
start limiting.
Get very limited. So there may be some rescues on some of that tax bill, but that's the key: is start before you even list a property. Engage, with your real estate professional. Find out what you think you're going to sell it for. Talk to your tax professional to see how much gains you're going to have, and then bring in somebody like myself to look at the case and say, here's what I think that you ought to look into. Here's what makes sense.
Check the full episode on our YouTube channel and on Apple Podcast.